Hello, welcome back guys. This is your boy Kevin here, and today in this 2023 I'm going to start with Forex trading. And as you know, this is the channel for trading, so where I show you Forex, crypto, and any other trading. In 2022 I showed you cryptocurrency and synthetic indices. You can go check all the trades over there. Or in this 2023 we are going to start with Forex trading. And I assume that you are new to Forex, and that's why I'm just going to start from scratch, so that whenever we do any, or we say any other thing in the near future, then you will have a background on what Forex is and everything about Forex. So that means you should, after this video, you should be having some background on what Forex is and how you can start with Forex. But this is an introduction of what Forex is, and I'll show you, or I will teach you step by step on how Forex work and how you can trade Forex on autopilot. So let's start by, what is Forex? Forex is a decentralized marketplace where financial institutions, businesses, and investors buy and sell currencies. So if we say the financial institutions, that include even the banks and other businesses, and investors like you and me and any other person, right? Like individual, buy and sell fiat currencies. They buy and sell fiat currency. So fiat currency is your government currency. Like for US, it's US dollar, right? And for Canada is Canadian dollar, and for Europe is euro, right? And for Japan is yen. So this means that it's fiat currency. So the fiat currency here is just like cryptocurrency. Now crypto is where you use crypto, okay, a digital currency, but this one you buy and sell fiat currency, but now you'll be holding and selling them as in digital form. Okay, so the Forex market, in the Forex market, trillions of dollars are traded on it every day, and it operates 24 hours a day. Okay, so the Forex market operates 24 hours a day and 5 days a week. These exclude the weekends. So Forex market doesn't work much on weekends. Okay, so it allows participants to buy, sell, exchange, and speculate on various currencies. So if you're an investor, it allows you to buy, sell, exchange, and speculate on various currencies. So the Forex market is driven by economic news, political events, changes in interest rates, and is influenced by various factors such as supply and demand, economic growth, and geopolitical risk. Okay, so anything like this, like even the political events, okay, they change the status of the Forex market. Okay, so this one we'll see in the near future videos, and you see how this one works. Okay, so when you make a Forex trade, you basically sell one currency and buy another currency, and this happens when you speculate that one currency will be stronger than the other, right? So that's when you'll buy it, and if it goes up, you sell it, right? So when it goes up, according to your speculation, you make a profit, and a loss if it goes in the opposite direction. So if you think the US dollar, or if you think the euro will go up, and then you buy more of it, and when it goes up, you make a profit, and when it goes down, you make a loss. It's just as simple as that. So this is where you do your speculation on if the currency that you're speculating on will go up or down, right? So Forex trading is how individual investors, businesses, central banks, and government pay for their goods and services in other economics. Okay, so whenever you buy a product in another currency or exchange cash to go on a holiday, you are trading on Forex. That's why sometimes you see some current exchange points where you exchange your currency that belongs to your country or the country that you're from to the country that you're traveling to. Sometimes they're called the booth, and sometimes they're called the Forex exchange markets. Okay, it's kind of a booth that you can use to exchange your currency to the other currency, because if you have a US dollar and maybe you're going to another country, right, that dollar sometimes may not work on that country, so you have to change it first so that you can use that the currency that the country is using. So this is called a Forex exchange booth. Okay, they use exchange rates to conduct the currency exchange rates. Actually, what the Forex currency booth does is that they exchange your fiat currency to their fiat currency, so that you can get a currency that will help you do some transactions on the country that you are going in, right? So which brings us to another point. What is exchange rate? An exchange rate is the value at which one currency can be exchanged for another country's currency, right? And it's basically determined by the supply and demand on the forex exchange market. And when you say exchange rate, in simple terms, it means that the relative price of two currencies from two different countries, right? So this exchange rate allows you to make money in a forex exchange market. So this is where, if you find that one currency has an exchange as a rate, which is called the exchange rate, to the other, that's when you buy it, you get the profit from that rate, right? So I'll just show you in a second how this one works. We do want to compare the forex market and other markets. So when I say other markets, that means the stock, the bonds, and other securities. So as you can see here, what is being traded here is currencies. So the asset that is being traded on forex is currencies, while in the stock exchanges, is stock, bonds, and other securities. And the daily trading volume is 66 trillion. And this is not a latest figure. Yeah, it might be more or less. It might be more, but it can't be less than 6 trillion. So, but in other stock exchanges, the trading volume varies depending on the stock exchange, right? By typically smaller than the forex market. So if this is 6 trillion or more, then this one will be smaller than this, right? So the trading hours is 24 hours, but in the stock exchange markets, it's limited or specific trading hours, typically Monday to Friday during business hours. But in forex, you can trade it in 24 hours. So that's the difference there. So another thing is the market participant. So the market participant on the forex market is central banks, commercial banks, financial institutions, hedge funds, retail traders, among others. Okay, but in the stock exchange, we have companies, investors, and other market participants. So this one, the participants in the forex markets are more, okay, than the stock exchange markets. So the market size, the largest financial market in the world. So forex is the largest financial market in the world, while the stock exchange varies depending on the stock exchange, right? So trading methods. You can trade using spot, forward, futures, and options. So when it comes to trading methods here, I will show you how it goes. But for as per now, you should just know that it's spot, forward, futures, and options. While other stock exchange, the stock, options, futures, ETS, and mutual funds. So the volatility. So this is where the volatilities comes in. So I'll also show you what volatility is, and you'll just know what a volatility is in the near future videos. But today, just know that it can be highly volatile due to the high leverage available and around the clock trading. So while the volatility of stock exchanges varies depending on the security and the market condition. Okay, so that's the kind of difference or comparison between the Forex market and other markets, which are stock exchanges. So what do we trade on the Forex market? So when we say Forex trading, what we trade is money, which is fiat currency, as we saw in the earlier slide. So we are not trading stock or crypto, but we are trading money here, right? So the analogy is just the same as above, because you buy a particular currency for the sake of speculation. Okay, sometimes the brokers may allow you to trade stocks and crypto alongside the Forex or the same exchange. So we'll also see different brokers of Forex markets, and you will also find that some Forex brokers will allow you to trade stocks and crypto alongside the Forex on the same exchange. Forex currency has their own symbols, and there is a way you can tell that this is a Forex market according to the symbols that you are having over there, right? So there are 3-letter codes that represent different currencies for different countries, right? So these codes are made up of 2 letters that represent the country or region associated with the currency, and 1 letter represents the currency itself. So for example, the country code of the US dollar is USD, okay, which stands for United States dollar. Other example of symbols include the euro, which is the EUR, the Japanese yen, which is JPY, the British pound, which is GBP, the Swiss franc, which is CHF, among others, right? So we'll see others in the near future, and in the next slides we also have others too. The symbol is used to represent the country in Forex exchange. In the Forex exchange market transactions. So financial statement and other business document, which is the USD, CAD, Euro, GBP, NZD, and among others, right? This is the table for the currency symbol, okay? It's not the complete table, but this is the most common ones, right? So USD is the United States dollar, which European Union, which is called the euro. For JPY is Japan yen. GBP is United Kingdom pound, which GBP represent Great Britain pound, which is the United Kingdom, right? So United Kingdom has several countries in it, England's included, and Wales. And the CHF, which is Switzerland franc, which is called Swiss franc, and AUD, which is Australia dollar, and CAD, which is Canadian dollar, and NZD, which is New Zealand